on to your buying criteria and your niche. First, I'd like to tell you what our buying criteria and niche is. And as far as buying criteria, this is going to be what tells you, numbers-wise, every time you get a lead in and you're analyzing your deal, whether or not it makes sense for you or someone else that you know. Vitally important to know this, because one thing that you want to make sure that you never do is become emotionally attached to a particular deal. It's always got to be about business. Business, business, business. So our buying criteria, if it's a all-cash deal where we're either bringing in a private money loan or a hard money loan, or if our offer is just all cash, then typically we want to be able to buy it around 65% of value or less. Now, that means we look at the estimated after repair value here. We determine how much the property needs in repairs. So we have our after repair value. We minus the repairs involved, and that number we multiply times 0.65. That's going to give us our all cash offer there, where it's going to be that number or less based on the deal. And if you're new to real estate, it might sound like that's buying a property just extremely undervalued and that you have all this room. End of the day, whenever you're buying property, renovating it, holding it, going through the process, those profits can get eaten up pretty quick. So it's important when making an all-cash offer like that you get it that low, especially if you're going to be wholesaling it to another investor, because you have to be able to give them a good enough deal plus include a wholesale fee for yourself. Now, if we're structuring a creative deal, that means that we're either buying the property subject to the mortgage, which means we're just taking over payments on an underlying loan, or maybe we're creating some seller financing where they had some equity in the property and we negotiated with them to accept that equity down the road or over time, something like that. That's when, and we're going to go in depth on those two strategies next video, so keep your eye out. But when you structure deals like that don't require a lot of resources as far as cash goes, then we bump up our criteria a little bit. In today's market, we used to go upwards to 80% of value if the property was structured in a way that didn't require really any cash and was in good shape. Now we've kind of bumped that down to between 70 and 75%, just depending on the deal. So that's our buying criteria. You need to determine yours. What makes sense for your specific exit strategy and what your business is doing in real estate. If you're going to be a wholesaler and wholesale and a signed contract, then you would want to find out the buying criteria of the investors that are going to be purchasing your wholesale deals. That's what's going to be most important to you. If you're actually flipping properties or buying and holding them, then you need to determine your buying criteria that makes sense for you and your goals and such, and just stick to them. Do not become emotionally involved in deals. It can cost you. Our niche has always been single-family houses. In our area, in and around the Charleston area, we focus in the 100 to 150,000 after repaired value properties. Now, depending on your area, that may be extremely low. If you're living out in California or some of the different areas around the country that are much higher priced properties, then you need to determine what makes sense in your market. For us in our market, it's single family houses. Typically, these are your ranch style houses, 3-bedroom, 2-bath, brick homes that are in neighborhoods that aren't the low, some of the real troubled neighborhoods, but also aren't the higher priced neighborhoods where if we hold on to the property, it will cash flow. We're not in the real troubled areas, and we're also not in a price range where the rental amount wouldn't cover the underlying payment on it. So that's our niche. And type of property, maybe depending on where you're at or what your goals are, maybe you would want to focus on condos, townhouses, vacation property, mobile homes, land. It all depends on where you're at personally. But I've always enjoyed staying in well-populated areas in the kind of property that was most predominant in the area. Because once you start dealing with condos, townhouses, specialty properties, you're shrinking the buyer pool, which ultimately the property is going to be a little bit less marketable. It's going to be a little tougher to find that buyer, to find that renter, depending on what your exit strategy is. So in our area, I like sticking to the single family house because that's where the masses, what they're looking for, and also what the masses can afford in our area. Price range, I told you what our range is, and even though that's our niche, we've bought properties for much cheaper and much lower value now, and much higher, upwards to $1 million property. So we have done all ranges, but our bread and butter, what we decided to learn and know, and what we decided was our niche, was those properties that I mentioned to you. And then as far as location, figuring out what specific areas of town or what areas you want to invest in is great to have just locked in, so that you can, when you're determining your marketing plan, you can make sure that you're marketing to get leads from sellers that match your specific niche. I would recommend, if you are getting started, it's definitely easier to work with properties that are within driving distance to you. We own property throughout South Carolina, anywhere up to 4 hours away, and just the management of some of the out-of-town projects definitely has proven to be a little bit tougher. And we've done a little bit of out-of-state as well, but I like the properties that I can drive 20, 30 minutes at most across town to get to check on if need be. It's time to pick your exit strategy. Based on everything that we've covered, based on your goals, based on your resources, based on where you're currently at with your knowledge base, with your contacts, what makes the most sense for you to pick as your primary exit strategy to get rolling in this game in 2009 and to kick some butt? Power of focus. I've seen it too many times talking to people that want to be a real estate investor, want to get started, and they go out and they invest in all these different books and courses. They have a course on short sales, and they have a course on wholesaling, and buying apartment buildings, and buying mobile homes, and they're disseminating their energy into all these different areas, and ultimately they're left with, I'm not sure, this sounds good for this reason, this sounds good for this reason. There is power in focus and concentration to determine what makes the most sense today where I'm at, to pick as my primary exit strategy, so that I can take that next step and go ahead and determine my marketing plan to get those seller leads coming in. So ultimately it's up to you to decide, and I hope that we've covered enough information here for you to do so. And if you have any specific questions there that I could help you out with, you can email me at patrick@mustknowinvesting.com. Let's move on to the action plan.